This is the Traders Exclusive Live Trader Showcase for March 2024. This is a quarterly event where we feature expert traders to bring you training and insights from 20 different expert traders. So please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. So I want to thank you all for being with us again. I'd like to introduce Stephen Primo of ProTrader Strategies, talking to us about questions you must ask yourself before every trade.
Thank you very much. Once again, thanks everyone at Traders Exclusive. Also, thank you for joining us at this first show today and first presentation. I have a great educational presentation to share with you. And today I'm going to talk to you about the 4 questions you must ask yourself before each and every trade. Now, it doesn't matter what method or strategy you trade. It doesn't matter if it's one of mine or something you've put together or someone else's method. It doesn't matter what market or what time frame. But these are all things that were taught to me some over 4 decades ago that I continue to use and apply to my own personal trading. And I really think they can help elevate you and take your trading to the next level. For example, let's take a look at this older chart here. There's one in Adobe. Now, most traders looking at this would say, well, gosh, Steve, I don't really have any idea what the market wants to do. It kind of looks like it's in a downtrend. So maybe I'll just stay away, or maybe even if I'm more aggressive, I'll short this. Well, with the 4 questions I'm going to be teaching you today, you would have known right off the bat that this wasn't in a downtrend at all. In fact, we weren't in a downtrend, but we were in an uptrend. So obviously, if we were in an uptrend, you would have known to buy. Let's say you decided to buy right here, okay? Now, the next questions would have actually told you where to place your stop, how to protect your trade, and in fact, where to exit at this point right here. So potentially, if you had applied all of these things to this one trade, you could have potentially captured upwards of 22.5 points. So this is what we're going to be teaching you today, the 4 questions you must ask yourself before each and every trade. Now, it may seem complicated at first. It's really very simple. In fact, it's simpler than you would imagine it to be. But everything I'm going to be sharing with you today is easily accessible on the PTS Primo charting platform. This is the platform I developed with ProTrader Strategies that actually teaches you how to trade and auto displays these 4 questions so that you can apply them to your method. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where you get the name Specialist Trading. A specialist doesn't mean you're any more special than anyone else, but if you ever Google those pictures of the old trading floors with a lot of paper on the floor and these gentlemen behind these large wooden podiums making these weird hand signals and screaming and shouting, those were specialists. Those were actually ones who specialized in making a market. So in the old days, if you wanted to buy or sell a stock, there were no electronic trading at that time. What you would have to do is call up your stockbroker on the phone. Your stockbroker would take your order. Let's say one of the stocks I traded was IBM. So he would say, okay, you want to buy 100 shares of IBM? He would then call the floor broker for that company, give the order to the floor broker. The floor broker would walk up to me and say, I have 100 shares of IBM to buy, and I would make a market for him. Okay, so I did this for 9 years. Once again, I did this through the crash of 1987 and the bull market that followed. I've created straight up markets, straight down markets, and sideways markets. So in my 47 years of trading, I know what works in terms of consistency, and I know what doesn't work. So about 15 years ago, I teamed up with ProTrader Strategies, my sister site, and we formulated Specialist Trading with one goal in mind, simply to educate traders, the things that have stood the test of time. And you'll see that attention to detail and education in today's educational presentation. Now, before we begin, as always, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results by applying these 4 questions, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get more education from our company on a daily basis, please feel free to follow us on Twitter or X, however you'd like to call it. Every day I post upwards of 5 or 6 different snapshots of signals that our strategies or techniques have generated. I also post little bits of financial wisdom. So there's lots of great free education on a daily basis. Please feel free to follow us on Twitter. There's our handle right there. You may want to copy that down. Now, we're a little bit different from other presenters in the fact that, remember, we are first and foremost an educational company. That means our goal is not to force feed you signals. It's not to tell you what we think the markets are going to do. It's not to tell you what we think the best time frame to trade is, or the best market stock or future or currency pair to buy or sell. That's up to you to decide. The service we provide is that we teach you how to trade so that you can make those ultimate decisions on your own. Okay, so that's what we provide at Specialist Trade. Let's begin today's educational presentation. I'd like to start out by something that my mentors actually shared with me, because believe it or not, when I first started trading on the floor, I know a lot of traders would say, hey, well, you know, Steve, you must have made all the bucks back then because you had advanced information, you know, you had PCs and you could trade right off the bat and it was simple, right? Not really. My first year or two, I struggled tremendously, and I was doing all of the things that most of us have been taught to do even today. You know, looking at news to make our decisions, like interest rates and earnings estimates, and seeing what the jobless claims were. I was looking at all of that 47 years ago. I was also following a bunch of gurus. We didn't have trading or chat rooms then, but we had a lot of newsletters, so I followed all of them. And on top of that, I had tons of indicators on my screen, upwards of 30 or 40 different indicators. So my trading was extremely complicated. It was just too many bells and whistles that had to go off. And this is what my mentors saw. They saw how much I was struggling. And these were specialists themselves. And I remember this is what they told me. They said, Steve, trading is really simple. It's the trader who makes it more difficult than it has to be. I mean, think about it. Do you have 3 or 4 computer screens in front of you? Are you subscribing to all these newsletters or chat rooms? Are you waiting to read, you know, all the blogs that come out in the morning, or listening to all the gurus on TV to find out what to buy or sell? If you're doing that, it's no different than what I was doing 47 years ago. And that didn't make me a dime then. So what I learned from my mentors is that it's the simple things that actually make you a consistent trader, not the complicated things. They said that it's the easiest thing in the world to overcomplicate your trading. Anyone can do that. You can pile on more and more tools, more and more techniques. It doesn't take a lot of character to do that, but it takes a lot of character to strip those things away from your trading and just rely on a few simple but consistent things. And that's what we're going to be focusing on today. These are things that my mentors taught me some 4 decades ago and that I continue to use today because they help sustain me with my consistency. Okay, so in order to be consistent, you must always ask yourself these 4 questions before you pull the trigger, before you even get into the trade, all right? And remember, it does not matter what strategy you're using. It does not matter what time frame you trade. It does not matter what market you trade. You could be trading crypto. It makes absolutely no difference. Okay, so let's start out. Question number 1. You must always ask yourself before you pull the trigger, am I on the right side of the market? Now, I know this seems overly simplified, but mostly everyone says, yes, I'm on the right side of the market. The market's going up, I want to be a buyer. The market's going down, I want to be a seller. But think of it. Are you actually on the right side of the market? Because if you're having difficulty trading, if you're frustrated with your trading, most likely you're on the wrong side. Meaning that if the market wants to go up and you're selling, you're going short, in other words, well, you're not on the right side. You're doing the opposite of what the market wants to do. And if you're buying and you're losing, well, obviously you're not on the right side because the market wants to do the opposite. So you have to ask yourself before you pull the trigger, when you get a signal, whatever it's based on, I don't care if it's based on, you know, moving averages or it's based on the full moon, ask yourself, am I on the right side of the market? Now, let's go back and look at that chart again in Adobe. You know, most traders looking at this would say, well, there's really no side of the market to be on because we're kind of going up, we go back down, it looks like we're going back up again. So the market doesn't really know what it wants to do. So I'm going to stay away. Well, this is the way most traders trade, and this is why a lot of traders fail. Here's what my mentors taught me, and this is the first thing I teach all of my students around the world. And we teach them to be on the right side of the market by applying the 50-period moving average. We call this the buy-sell line because it tells you whether you should be a buyer or a seller. Now, I don't care, this is a daily bar chart. I don't care if it's a 10-minute chart or a monthly chart. Doesn't matter what market, what time frame. you should always have a 50-period moving average on your chart, whatever you're looking at. And then you have to ask yourself, where is price in relation to the 50-period simple moving average? Now, if the majority of price is below, you have a bunch of closes below, well, then the market overall trend is down. That means you should only be a seller. But in this case, the majority of bars are closing above the 50-period moving average. So that's telling you that the market is not going in some kind of whipsaw sideways pattern. It's telling you the overall trend is up. And so the odds will be in your favor if you're a buyer. You see, we're just trying to give you an edge. This is not a 100% foolproof technique, but this will give you an edge. In fact, if you don't really think it's that important, go back and look at your last 10 or 20 trades. I can almost guarantee that the reason why you lost is because you were buying below the 50-period moving average and selling above. Okay, so if price is above the way we see here, then the overall trend is up. If the overall trend is up, we will never sell. We will never go short. Sure, we can sell to exit a trade, but I'm talking about going short, betting for the trade to go down. All right, we will only be a buyer. All right, so automatically we know what side of the fence we're on. Automatically we know if we are in sync with the market. So let's say you are a candlestick pattern buff, all right? You like candlestick patterns and you say, well, here's a bullish engulfing pattern right here. That's a pretty positive sign. I think I'll buy once we trade above that engulfing bar. Okay, that's fine, perfectly admissible. You're in sync with the overall trend and you have a buy setup based on a candle pattern. This leads us to question number 2. Where do I place my initial stop? Now, most beginning traders say, wait a minute, why don't I ask myself, where do I get out with a profit? See, that's what most traders want, but we have to find out first, before we think we're right, what if we're wrong? What if the trade goes entirely against us and we lose money? Where are we going to get out? Most traders don't think about this, myself included when I first started. They don't think about it until it's happening. And you say to yourself, well, I'll wait a little longer, maybe I'll buy some more, I'll double up, or it's bound to turn around, I'll just get out when it goes back up. But you don't have a plan in place. So the first thing you have to do is ask yourself, where do I place my initial stop? Which is another way of saying, where do I get out if I'm wrong? Now, in our courses, we have upwards of 6 or 7 different ways to place stops. Remember, we're an educator. Our job is simply to provide you with the tools and techniques so that you can make your own decisions, because every trader is different. Some traders have large capital. They have a lot of capital to trade with, so they have large risk parameters. Other traders have small amount of capital. They don't have a big trading account, so they want to keep their risk minimal. So let's just go and apply probably one of the most generic ways of applying a stop, which is using the most recent short-term pivot low. And in order to do this, you look and see where you would be entering and just go back in time and find out where the most recent short-term low was. A pivot low is when you have this kind of 3-bar pattern. You have a low here, followed by a lower low, followed by a higher low. This is telling you right here that this should be some type of mini support. So a generic stop would be right at this level. We place our stop right there, okay? Once again, we have numerous ways to apply stop. We're just using a very standard one right here. This now brings us to question number 3, which is what most people want to find out, and that's, what is my profit target? Where do I get out now if I'm right? Okay, well, this is what's called a fixed profit target or a fixed exit. And the reason why we needed to know where our stop placement was is because it's going to help us determine where our fixed target is. For example, we go back and look at that chart again, and if we're going to be entering here, and if the trade goes against us and we get stopped out, how many points will we lose? Well, we figure it out and it comes out to 11.25 points. So you have to ask yourself, are you willing to risk 11.25 points? Do you have enough capital? Is your account size big enough? Can you sleep at night knowing you're losing 11.25 points? Okay. So if you say, yeah, I can handle that 11.25, I'll get a small amount of size. I won't have 10,000 shares. Maybe I'll only have 50 shares, but sure, I can trade that. Okay, so what you want to do now is, if you're willing to take that amount of point risk, you simply double it. And you want to double that, so that number would be 22.5, and you add that from where you would enter, okay? 22.5 points. And this is your fixed exit right here. That number would be 247. Okay, so we haven't even entered the trade yet, But we know where our entry point is going to be. It's going to be if we trade above this candle bar right there. Our stop is going to be right here if we're wrong, and our exit is going to be right here. You see how you have a plan in place? You have all these things, and you haven't even entered the trade yet. This is the way trading should be, very organized. It shouldn't be trading at a whim and you're just going nuts, yelling and screaming and thinking, okay, I've got to do this now. I guess I'll get out here. Maybe I'll buy here. No, it should all be in place even before you pull the trigger. Which leads us to the fourth and final question, which is, how do I protect my profit? So what does this mean? Well, I've often said to my students that the worst feeling in the world is not getting into a trade and the minute you buy something, it goes the opposite direction, it goes down. Or the minute you sell short something, it goes the opposite direction, it goes up. Sure, that stings, but it's not the worst feeling. The worst feeling is being in a trade and you're still in it and you have a profit and you're feeling really confident about that. You feel really good and you can't hardly wait till you get to your exit. And then you wake up one day, you're going to make yourself a sandwich and all of a sudden something happens and now that profit has dwindled away and now you have a loss. Okay, so that's the worst feeling in the world. We want to protect that. How do you protect a profit that you haven't exited yet, but on paper you have a profit? Well, let me show you what we have here. We teach our students to apply what we call the 50% rule. That's basically the distance from where you enter to where you'll be exiting. You want to find the midpoint, 50% point. And so what this means is once you enter into the trade, if you get near or at that 50% level, you should move this stop placement to unchanged. That will tell you and show you that you're not risking any money now. Now you're playing with the house's money. And even if the trade turns around and goes the opposite direction, at least you'll just break even at the very worst. Okay, so this is the 50% rule. So let's watch the trade unfold. We haven't entered yet, but now we entered. It traded at our price limit. Okay, so now we're in and we're just watching. It's going in our direction. We feel okay about it, but we still have our exit in place. We have our stop placement in place. It's getting close to that 50% line, and here it actually touches and intersects and closes above. So at this point, we can move this stop to unchanged to where we entered into the trade. And now we are not risking anything. We've protected our profit. So if it continues to go higher, great. But if it all of a sudden turns around, let's say the market really gets worse and then maybe some news comes out, well, you didn't lose anything. You're playing with house money. Now, the only thing left to do is watch the trade unfold. You see, I've often said to my students in my webinars, if you are trading correctly, it's very boring because everything is already in place. It's similar to fishing. You just cast your line and you wait. You know, there's no yelling and screaming. There's no making 10, 20 phone calls. There's no 30, 40 indicators in front of you. You're just watching. That's the way professional traders trade. If you're yelling and screaming and watching tons of things and don't know what to do in the next moment, that's more of a gambling mentality. And that's okay, but you just have to be aware you're not really trading, you're gambling. But if you're a professional trader or trading with a professional trader mindset, it's very boring. That's how you know you're doing it the right way. So you just sit back and watch, okay? Our stop has been moved to unchanged. We have no risk, and we have our limit in place to exit. And we just simply watch the trade and see how we're going to be getting out. We let the market tell us what it's going to do. And then ultimately, we exit with a 22.5 point gain. See how simple that was? We didn't have to look at earnings. We didn't have to look at interest rates. We didn't have to worry about the jobless claims or any news coming out. You have a plan in place and you just wait. Trading is really simple, just the way my mentors taught me. It's the trader who makes it more difficult than it has to be. Okay, let's look at another example, all right? Same process. All right, here we have an older chart of FSLR, all right? Now, let's say you're a technician. You like to look at charts, you like to look at patterns, and you say to yourself, Steve, this is a tremendous bullish wedge, a really bullish pattern. And the way this works is that if we close above this, this downward trend in the bullish wedge, this means we're most likely going to go back to the old highs, maybe even continue going even higher. So you're really excited about going long about this. So you're waiting, and lo and behold, the very next day, we actually close above there. So you want to jump in and buy everything. You're all excited. You think you're going to make a ton of money. But remember, even if you bought right there, are you on the right side of the market? So this leads us to, once again, to question number one. Before you enter a trade, the way you just did right there, you want to ask yourself, am I on the right side of the market? And the best way to do that, something I've been using for 47 years now, my own personal trading, is to apply the 50-period moving average. And then you ask yourself, where is price in relation to the 50-period simple moving average? Now, initially, price was above, but then we had 1, 2, 3, 4, 5, 6, 7 closes below, which is more than enough to tell us that the market wants to go lower because the overall trend is down. So if you buy right now, you're betting against what the market wants to do. You're on the wrong side of the market. You're swimming upstream, okay? You don't have an edge behind you. You're really, going against the grain. And the odds are this won't work out. Sure, every once in a while you will have one that works out, just the way in Las Vegas, every once in a while the casinos will give you a win with the slot machines. But remember, they're designed to give you a win every once in a while because they ultimately want you to stay there, because if you stay there long enough, you're going to give all your money back. It's kind of the same way with buying below the 50-period moving average and selling above. Sure, every once in a while we'll get a nice winning trade and you'll say, hey, this stuff that I heard that Steve and Primo talk about, it doesn't work at all. But if you keep doing that over time, you'll eventually give it all back. Take it from someone who knows, okay? All right, so now that you learned this simple rule, are you going to buy here below the 50, even if you love that pattern? No, you're not. Why? Because you're on the wrong side of the market. And look what happened in the next 2 days. You would have been saying, wow, I'm so glad I didn't buy, because now I would have been having a loss here, okay? So you say to yourself, well, you know what? If I should be a seller, I see a ledge here. This is another, just a kind of a mini support here, a little ledge. Okay, so I'll listen to that guy who gave the webinar, Steve Primo. If we trade below there, I'll sell. So that's my entry point, all right? Just to break below that little support level. Okay, that's okay, fair enough. If that's what you want to do, that's fine, based on what you've seen, and at least you're in sync with the overall trend. Which leads us to question number two. What if you're wrong? So where do I place my initial stop? Remember, once again, we have tons of different stops to choose from, which we teach you in our courses. Let's just use the most generic, which when you find where your entry point is, you just simply go back in time and find the most recent high, which would be right here. And we have that pivot high again, where we have a high followed by a higher high and a lower high. So this would be our stop placement right here. Okay, question number three. What is my profit target? Well, we use the same formula we used before when we were going long. Nothing changes. We're just going to flip the formula upside down. So in other words, we want to know if we entered here to go short and we exited here with a loss, how many points would we lose? Not how much money, because everyone's money is going to be different depending on how many shares they shorted or puts they bought or what type of spread they had. So we want to know how many points will we lose? And we add that up. If we went here and sold here, that would come out, to 8.20 points. If that's acceptable, if we can risk 8.20 points, okay, then we want to double that, which now is 16.40, and subtract it, because this is going to determine where our exit point is. So 8.20 times 2, excuse me, and we subtract that, 1640, this gives us our exit level, which is 51.15. All right, have we gotten to the trade yet? Absolutely not. We haven't even gotten short yet. We haven't even pulled the trigger, but we know where we're going to get in. We know if we're wrong, where we're going to get out, and we know if we're right, where we're going to exit. Excuse me. So we're starting to trade like a professional trader. We have a plan in place, which leads us to the fourth and final question, which is the most important question, in my opinion. How do I protect my profits? Because once again, regardless if you're going long or going short, we need a plan in which to protect our profit in case all of a sudden things turn around. So we apply what we call our 50% rule, meaning that if we entered here at 67.55 and we exited with a profit of 51.15, what is the halfway point? Well, it would be roughly around right here. Now, price, this is a common question most of my students ask. They say, well, Steve, I didn't move my stop because it didn't touch the 50% level. Remember, this is a subjective rule. It doesn't have to actually touch that exact halfway point. It just has to get near, or it can go below. It's up to you. But you have to use this as some type of subjective feel, okay? So let's watch the trade unfold, all right? Now, initially it goes down, so we're feeling good. It's going in our direction, okay? It's even going more in our direction. Now, at this point, if you wanted to, you could have moved your stop because it's really been going down. But if you wanted to be more sure, you waited for this day, and you see it finally did touch and intersect the 50-point intersection. So you would have moved your stop to the entry price. Now, you're not risking anything. You're protecting your profit. If you're short this trade, you have a nice profit, and you're just protecting it. You have upwards of about 10 points you're gaining here. So you just want to protect it, so you move your stop to unchanged. And once again, now the only thing left to do is to watch the trade unfold. It's like fishing. If you are trading correctly, it's extremely boring. It's like fishing. You're just simply waiting in the boat, waiting to see if you hit any catches of any fish. That's it. There's no yelling or screaming the way I thought it was supposed to be. There's no two phones in each hand and talking and to two different brokers. Trading is not like that. That's gambling. If you're really trading, it's properly, it's very boring. All right. So we have our entry here, our midpoint here. We've moved our stop to unchanged, and our exit. Let's watch the trade unfold. 1, 2, 3, 4 days later, we exit with a 16 and nearly a 16.5 point gain. Easy, right? Remember, once again, we didn't overcomplicate the trading by saying, okay, we have to have tons of indicators here. We have to have this amazing support and resistance indicator. We have to have this amazing fundamental tool that helps us to determine what the earnings estimates are. We have to listen to that guy on TV and then go to that chat room. Remember, it's the easiest thing in the world to overcomplicate your trading. It takes a lot of character and a lot of courage to simplify it, to only use a few things to make your trading successful. But trust me, I've learned over time, it's the simple things that actually work in terms of consistency, not the complicated ones. So there you have it. The 4 questions you must ask yourself before each and every trade. So let's talk about a special offer we have. Before we do that though, let me go back once again and just go over these 4 questions, all right? In case I know a lot of you may have joined us in late. The 4 questions we have, the first one, and you may want to write this down, but this is being recorded so you can just remember this. The first one, am I on the right side of the market? The best way to do that is to apply the 50-period moving average. Extremely simple, but very, very powerful. If price is above the market, not some guy on TV and not some guy in a webinar, the market, the source of what you're trading is telling you the overall trend is up. Therefore, you should only look for buy setups. If price is below, the market, the source of what you're trading is saying the overall trend is down. I want to go lower. Therefore, you should only look for sell setups, okay? Question number 2, how do I choose a stop placement? Well, remember, we have numerous stop placements, but the simplest one is just to go back and find the most recent low, the pivot low as your stop, or the most recent high, the pivot high. It's very simple. Just go back in time. You can look over that and look over last, this presentation and recording, and you'll be able to understand that. Now we get to the most popular question is, where do I get out with a profit? Well, the way to determine that is to formulate where you would be entering and where you'd be exiting, the amount of points that you would be losing with a loss at your stop placement. Well, if that's acceptable, then you simply double that. If you're long, double that amount from where you entered, and that's your exit point. See, this is ensuring you that you're going to be making twice what you lose. That's called a good risk reward ratio. So you want to make at least twice. Some of our students don't even double that, they'll triple it or quadruple it because they want to make 3 or 4 times what they lose, and that's fine. But I just wanted to keep it simple in this educational presentation. So at the very minimum, you should always make at least twice of what you're risking, okay? Now, if you're going short and you're risking, let's say 10 points, well, then you want to at least make 20, okay? Now, if you remember, all this information should be there before you, before you even pull the trigger. before you even enter the trade. So you can ask yourself, wow, I don't think this will go down 20 points. I don't think I can take that amount of risk. Well, then don't take the trade. That's the beauty of this. You see, you're in charge. Remember, as an educator, our job is to provide you with this, but it's up to you to make the decision whether you want to trade it or not. We are not a systematic company where we say everyone has to trade the exact same way, the exact same signals. You have to get in, get out at the same place. It's up to you. That's the only way you become consistent in my book. And then lastly, you want to protect your profit. You use what we call our 50% rule. If you get half the distance to your exit with a profit, then move your stop to unchanged. That way, if it turns the opposite direction, then you'll at least break even at the very worst. I can't tell you how many times when I was first starting to trade, how I'd be so excited to have a winning trade and I feel really good about myself. And then all of a sudden something happened in the market and things turned around and well, now I'm just breaking even. I go, well, that's okay. It'll turn around. And then now I have a loss. I go, well, I'll buy some more. Now I have a really big loss. I didn't protect myself and now I'm stuck with it. So I just turned in, rather than a short-term trade, now I turned into a long-term investor because I'm holding this position now, hoping and praying for it to turn around. You never want to get to that point. The best way to do that is to apply the 50% rule and move your stop to unchanged when you get to half the point, okay? These are the 4 questions you must ask yourself before each and every trade, regardless of what method you trade, regardless of what time frame, and regardless of what direction. It makes absolutely no difference, okay? All right, now that I've reviewed that, let me tell you about a great offer we have, okay? Because we're just going to take a few minutes to tell you about something with some more edges. Now, I just shared with you some really simple but powerful edges. How would you like to get more? More that are entirely different but can help elevate your trading. You can start applying to your trading as early as today. Well, here's what we have: our Secrets of a Stock Exchange Specialist training sessions. I would say I'd say about 3 or 4 years ago, I was the head speaker at a traders convention in Denver, Colorado. I spoke for about 3 hours and they recorded the presentation. So this is what this is, the Secrets of a Stock Exchange Specialist video seminar. It's the recording of what I was teaching to students at this seminar, and it's 3 hours jam-packed of information and techniques that I've accumulated in my 47 years. I talk about more high probability trading edges. I also went into detail about which indicators not to use. I went into the difference between a system versus a strategy. I also talked about the #1 chart pattern, went into detail a little bit more about being on the right side of the markets, and everything I shared in this 3 hours you can apply to any market and any time frame. But here's, I think, the best thing I went into in the Secrets of a Stock Exchange Specialist video seminar. It's right here. I gave away the complete rules to one of our most, I'd say, prolific as well as simple and powerful pullback strategies. It's strategy #1. Now, you get the complete rules: entry, exit, stop placement. And if you're not familiar with what a pullback method is, a pullback method is designed to buy at lower levels within an already established uptrend, and it's designed to sell at higher levels within an already established downtrend. Let me teach you what that looks like, okay? This is strategy #1. Now, obviously, looking back in hindsight, we were in an overall uptrend, okay? Pullback strategies are designed to buy at these lower levels right here when the stock sells off or whatever market sells off. That's what you're looking to do, buy at these lower levels. We're not looking to buy as it's going up. We're waiting for it to get lower so we can buy at these lower levels before it goes back up again, okay? Because this is the way trends usually occur. They're more like stair step instead of going straight up or straight down. So we want to buy at those lows. Now, on our platform, it's as simple as just clicking on strategy #1 and you see the signals appear, okay? So these are actual signals that occurred in ARHS, and they were just at the beginning of this year coming into March. And look what happened in the first week of March. You see how the stock went up there? This was just about a week ago. Here's another example in BIIB, Biogen, okay? Looks like the market's basically doing nothing, kind of just drifting lower, but this is how sensitive strategy #1 is. Just based off these 2 or 3 day bounces, a sell signal was generated, and the stock fell 25 points in the next week. And we've all seen NVIDIA in the last month or so. Now, the stock was going straight up in February. Towards the end of February, just about a month ago, it started to head lower. A lot of people said, well, that's it. It's topped out. Time to get out. But actually, strategy #1 generated a buy signal right at the lows, and the stock went up 250 points coming into the first week of March, okay? Just a couple of weeks ago. So you're going to get the complete rules to that method, along with many more high probability trading edges. Okay. Now, this entire sessions course plus the strategy number 1 usually runs close to $1,000. It's that much information jam packed into it, roughly about 47 years of techniques and tips that I've accumulated. But because of our association with Traders Live and just being able to talk and being able to give you a really nice presentation, we're going to give you a great discount. Okay, here's our Traders exclusive discount. We're going to discount it to $37, okay? $37, but that's for a limited time only. I think about $37, you can't even go buy lunch for less than $50 these days. It's $37, you're getting jam-packed information that's taken me over nearly 5 decades to accumulate. So take advantage of this great offer, okay? We're also going to throw in one final extra bonus. Along with your purchase of the secrets course for $37, we will include a 50% discount on any other product we sell, any strategy, any technique as well, 50% off. This is a great offer. Here's how to take advantage of this because you owe it to yourself to take your trading to the next level. Contact my sister site, which is ProTrader Strategies. They're in charge of all the discounts. They're in charge of all the tech support. They can help you. Just simply give them a call at 310-598-6677. And they can take your order to the phone or answer any question regarding, the extra bonuses or anything else you may want to ask. Okay. Now, I believe I'm at the end of the presentation. We have about 15 or 20 minutes left for any questions. If you do have any questions, now would be the time to ask. I always reserve the last 15 minutes or so because I know some people, may still be confused about these 4 questions or may want to ask other things. So Sherry, if you wanted to read them to me or if there were questions at all or not, it's up to them.
All right, give me just a second. I want to put your link to your offer up there.
Okay, yeah, that link, thank you, Sherry, because that link you see at the bottom of the screen there, that's the link that will take you to the info and the sign up page if you'd like to sign up online, but it's not a live link. So thank you, Sherry, for posting that link. I appreciate it. And remember,
okay, good deal. All right. Okay. I just wanted to confirm that the link was working.
okay,
I just put in the chat. Now I'm going to go and check the questions.
thank you.
So, oh, it's right in front of me.
Okay.
I'm looking for the chat box and I had already popped it out. Let's see. Okay. Okay. Tony wants to know, what is your profit factor with the system? And he has
Okay.
another one after that too, but I'll wait and let you answer that. What is your profit factor with this system?
Okay. I guess I'll get into a little bit about what I talked to in that secrets, because remember I said in the 3-hour course, I talk about the difference between a system and a strategy. And the difference is that a system is rule-based and everyone has to do the exact same thing every time. Everyone has to get in at the same point, exit at the same point, place your stop at the same point, and take every trade, because in order to come up with statistics like profit factor, win-loss, ratios and things of that nature, worst case scenario drawdowns, everyone has to do the exact same thing, okay? A strategy, which is what the only things we teach and trade, are different. They're about 75% rule-based, but then they allot for about 25 or 30% of discretion. Now, discretion doesn't mean you woke up that morning feeling, oh gosh, I feel really lucky today. I think the market's going to go straight up. I'll bet the farm. That's not what discretion means. Discretion is more of an insight through experience, through trading, where you say, I've seen this scenario before. There's a lot of volatility, so I'll change my stop placement, or I'll change my entry point, or I'll change my exit point. This is the way we teach. So because of that, because we encourage everyone to trade differently and trade according to their means, we cannot come up with statistics like profit factor. In fact, we encourage traders to stay away from statistical trading because it's been my experience. I've taught and I've traded systems that have gone back systematically with profit factors, with win-loss ratios and tremendous numbers going back 10, 20 years that had fantastic win rates and really great numbers. And each and every one of those systems in different markets and in different scenarios, each and every one of them blew up. And someone would say, well, why? How? I thought they had 10 years of fantastic results. They do, but the market is always shifting and changing. So we don't really rely on statistics like that because, once again, everyone has a different account size. I know traders who say, Steve, I have hundreds of thousands of dollars. I don't really care much about risk. I have a lot of money, and so I'll take the biggest risk there is. And I said, great, we have stops for that. We have someone who say, Steve, I only have $5,000 to trade with. I don't want to risk a lot. So we'll teach them how to have a small risk and how maybe enter at a different point to maybe minimize risk. If we teach and encourage that, everyone's going to come up with a different result. So there's no way, I apologize, I hope that's kind of a long-winded answer, but there's no way to come up with a profit factor because we don't encourage systematic trading and systematic numbers like that.
Okay. So the next thing that he asked was, do you have a scanning technique you use, or do you have a list of favorite stocks, quote unquote?
Yeah, we have numerous on our platform. We have numerous scanning techniques for the hottest stocks, stocks that are the strongest, and each and every one of our methods can be scanned for. Each and every one of them. You can even scan for that 50% rule I shared with you, not 50% rule, the 50% simple moving average. We call that the buy-sell line on our platform. You can scan that for stocks above the 50 period, stock below. It's just really simple, and we've made it, one click away on our platform. So these are all questions to ask ProTrader Strategies. They would be happy to fill you in on pricing and everything. But yeah, it's really simple, and we have numerous scans for different markets, remember, we're an educational company, so we're trying to provide you with all these different options that we feel have high levels of consistency. If we don't really feel that they have levels of consistency and they don't really help you, we don't really teach it.
Good deal. Okay, so Timothy made a remark, a comment that I would like to know where you stand on it. He is proposing that 2.7 or above is the golden level on risk to reward.
Well,
so if you risk $1,000, I think he's saying you should make 2,700.
Yeah, that is good. I mean, I'm not disputing that, but once again,
I mean, you like that, but is it possible all the time?
Yeah, it's not possible all the time. And remember, once again, we're kind of on the same side of the fence. We want traders to be making more than they're losing. But the point is, we don't have a finite number that it must be this. If that's what you feel, then great. Then by all means, go ahead, because we're not in any disagreement with the concept you're applying, which is to make more than your lot. But we don't really come up with a defined number where this is where exactly what you must have. It's really up to you. But if someone were risking one to make one, we would definitely say that's not going to really help you a lot unless you really have a lot of trades. But so we don't really teach that.
Right. So he went in to explain a little bit more his thought process on it. It helps him to account for fees, costs, slippage, errors. So that's fine. And I think what happens here is that it's the psychology of it.
Right.
If you know what you want your return to be, then it helps guide your decisions on how long you stay in and, and what you're going to go for.
Exactly, Sherry, you said it perfectly. It helps guide your decisions because I don't know if he came in later, but remember, our goal is to provide you with this information so that you can make your own trading decisions. I've been trading for 47 years now, and the only traders I know that are still around are not the ones that go to a signal service or ones that read daily blogs and find out what someone on TV likes or doesn't like. No, they have a plan in place and they make their own decision based off what makes them feel comfortable. Now, obviously, this 2.7 makes them feel comfortable because of risk, because of whatever they said, then great. Then by all means do it. That's what
definitely.
But everyone's different.
Absolutely. And by the way, Tony said, thanks for the answers about the profit factor. He said, and the scanner answer, it was awesome. And then Mark is asking, do you believe in automated mechanical trading versus manual discretionary trading? What has been your experience?
No, when I was first starting, like everyone else, I thought this would be so great if it was just automated. This would be fantastic. But now, after trading for this long, no, we're really against automatic trading. Why? Because it takes you out of the game. Once again, you're no longer a part of the process. And our whole philosophy is you're in charge of your trading. You see, that would be like, It's having someone teach you how to play golf, and then when you go to play with your friends, say, well, can you play for me? Or having an airline pilot ask everyone, the passengers, can you guys fly this for me? You have to be a part of the process. You have to trade and be there and see, because as I said earlier, we teach strategies which are 75% rule-based, but they allot for some discretion. And so maybe this metaphor will help people understand, but a lot of times in football, even though I'm not a huge football fanatic, a lot of times in football, they have what's called on the offense an audible. This means they have a play set, and so they go up to the line ready to hike the ball, and the quarterback sees that the defense on the other team has shifted, it's changed. So what he does is calls an audible, meaning that we're kind of altering or editing our play because the defense has shifted, and so we may have to shift things around ourselves. It's the same way with trading. If you were a systematic trader, it doesn't matter. It doesn't matter if the volatility is huge or if there's no volatility. We have to do the same thing every time. But with strategies, you can shift according to the market or according to your insight. Maybe you've seen this scenario before and you said, you know what? A couple of weeks ago, I saw the same thing. I'm gonna raise my stop. I don't want to risk this much because this kind of looks like similar to what happened last time. So that's why we say, you should always, make your own decisions, and you shouldn't take yourself out of the game by having automated trading. When you have automated trading, you're no longer a part of the process, and that goes entirely against our education.
Yeah, cool. All right, now, does anybody have any other questions? We have about 10 minutes left, so we have plenty of time for questions.
Sherry, if I could say something, when I've done this webinar in the past, a lot of people ask this question, so maybe people are thinking of it. People always say, well, why the 50-period simple moving average? Can I use a 34 exponential moving average? The main thing about that is, I asked the same question when my mentors told me that some 4 decades ago, like, why do I have to use this? The main thing is that we want to keep that philosophy of keeping things as simple as possible and not overcomplicated. So I invite everyone to experiment with different moving averages, whatever makes you feel comfortable once again. But the object is to use this to tell you what side of the fence to be on. It's not to tell you when to enter, when to exit. You have the structure of the method for that. What we're using this solely for is to get you on the right side of the market. And it's been my experience after experimenting with different moving averages, different crossovers, different exponential, weighted moving average, that the 50-period moving average works the best because it can transfer over so easily. You see, we don't want to overcomplicate things by saying, well, for stocks, I'll use the 50, but if I'm going to be using crypto, I have to go to 200. And then if I'm going to be using the E-mini futures, I have to go to the 20-period. And then if I'm going to be using currency pairs, I use an exponential 13. That's too overcomplicated. You're making things difficult for each and every market and time frame. So the 50 seems to transfer well onto all of those. But having said that, I encourage you, if you find that the 34 exponential works better for you and your style of trading, then great. The main concept we're trying to just instill in everyone is that when you plot that 50 or 34, whatever moving average you want, if price is above, you should only look for buy setups. And if price is below, you should only look for sell setups. I know it sounds overly simple, but trust me, if I were stranded on a desert island and I could only trade with one tool, it would be that. That has saved me so much in my nearly 5 decades of trading.
Okay, that's definitely cool. So maybe you might want to go back through your offer there to show us
Sure.
a little bit more about it. And I can let you know when Anka is in the room if you need to end anytime sooner than top of the hour.
It's like I said earlier, I was asked to be the head speaker at a conference, a trading conference in Colorado, and they recorded this, and this is a recording of my presentation there. And today I spoke for an hour, but then I spoke for 3 hours straight, and I went into a lot more different edges, totally different from than what I explained today. But the best thing about this offer is that you're getting the complete rules, the entries, exits, stop placements, to a great pullback method. Strategy number 1. I showed you a lot of examples there in NVIDIA, also in, I believe, in BIIB. and it can work in any market and in any time frame. And so, normally all this information, jam-packed over 4 decades of things, tips, techniques I've accumulated, it would cost close to $1,000 on the ProTrader Strategies website. We've discounted it down to $37, which is really an amazing price. I can't believe my nearly 5 decades of information is reduced down to $37. But it's for a limited time only. So you really want to take advantage of this. I mean, think about it. Like I said, there's not a lot of things you can buy for less than $50 today. And this is not something that, expires and, I mean, in terms of the link, the video link you'll get, it's yours forever. It's not something that disintegrates after a month. It's yours to keep forever. So you can always look back at these tips and techniques and all the edges included. So it's a really great offer. And on top of that, I think there's an extra bonus as well. Yeah, the extra bonus was if you purchase that $37 offer, well, along with your purchase, we will include a 50% discount on any other product. So let's say you wanted to buy another strategy or another technique or something, you'll get half off on that. So it really is a great deal. I mean, you can just stick with the 3 hours of education for $37, or if you want to get something else, you can do that as well. So it really is a great offer. So if I go back to the, and that's why we say.
That's fantastic. I just want to ask you, is that product all online so you can view it online, or is it a download, or how does that work?
What it is they send you a link to the recording to the presentation, and you can view that whenever you like. So it's just yours. You can, you can download
so you can
it.
Stop and you can watch a little and come back, and then watch a little more and come back.
You can always use it. What a lot of us do is they use it for reference. I'll go back and say like, wow, let me just go back and what was that tip he talked about like in hour number 2, and they can use that as reference. But a lot of people think, I don't know, maybe some other people have things that are only good for a couple of weeks or a month, and then they kind of just dissolve. No, this is yours for life. It's all your information that you want to keep for reference. So I'll just go back. You can use that link below to, I think Sherry posted it. You can go to the sign up page or the info page, or simple enough, you can contact ProTrader Strategies, my sister site, 310-598-6677. They have trading consultants manning the phones right now. They'd be happy to answer your questions or take an order if you like. It's up to you.
I put the phone number in wrong. Typo in the above number. I just wanted it there. And so it's 310-598. I put 589. I'm sorry, guys. 6677. And then I also did put the trading at ProTraderStrategies.com, so you guys can email if you need to. There's a phone number. There's a link. I mean, for $37, that's fantastic. But guess what? I think the real sleeper in there is the 50% off. When you look at everything that Stephen's offering and the knowledge you can gain in that 3-hour webinar, and I think that was an in-person seminar, wasn't it?
Yeah, it was. And you know what, Sherry, one thing I forgot to mention is that no matter what course, whether it's $37, we have some courses close to $5,000, no matter what course, everyone gets my private email address. So if you ever have a question or something is a little complicated to you, you can always email me. I was answering emails this morning before the presentation. You can send me an email on the weekend, before the opening, after the close, makes no difference. I'll get back to you just as soon as possible. It doesn't go to an assistant or to an intern. All emails just come strictly to me. So that's also another perk in there as well.
Stephen Primo of ProTrader Strategies, thank you so much.
Thank you so much. Thanks to Traders Exclusive for offering me this chance to speak. And thanks to everyone for attending today. I hope you learned something. I really wish you all the best of luck.